Hi everyone, welcome to the FAR classes for US CPA. Yes, financial accounting and reporting classes of US CPA. In this particular video, I'll be walking you through what all things you can expect in chapter 3, that is your select financial statement account. This particular chapter you can expect around 30 to 40% would be coming in your exam, so you should have deeper idea about what all things you can expect in this chapter. So let's dive into to understand more in detail about chapter 3, that is select financial statement accounts, and that is your 30 to 40% of your exam. What is our on the way in chapter 3? In chapter 3, you'll be understanding one by one respective item which comes in the financial statement. If you look at from the asset side, cash, trade receivable, inventory, property, plants, equipment, right? So in the cash, you'll be understanding cash and cash equivalent both, as well as the bank reconciliation. Very simple, straightforward. I'm sure you might be studying from your school days, right? Trade receivable, you'll be understanding account receivable, not receivable, provision for doubtful debt, bad debts, right? All those things. Inventory, you'll be understanding raw material, WIP, FG, stores, spares, initial measurement of that, and then subsequent measurement, which is very important. Initial measurement you can take on the cost, but here you'll be understanding certain concept of the costing as well. So you might have heard about like standard costing. Have you guys heard about it?
Yes, sir.
Standard costing, marginal costing, activity based costing, right? For the calculation of the inventory valuation, how to do the loading of overheads, labors, right? On the raw material when it moves from raw material to WIP and from WIP to FG, and then calculation of the cost of goods sold also. Those all things will be understanding how to do the accounting of inventory, FIFO basis, LIFO basis, weighted average basis. And good thing is in US GAAP, LIFO is also allowed. So that's also difference. In IFRS or NDS, LIFO is not allowed, but in US GAAP, you can follow either FIFO, LIFO, weighted average, moving average. All those methods are being allowed, right? Next, you'll be understanding property, plant, and equipment. In the property, plant, and equipment, you'll be understanding what comes in the cost, which include acquisition price you have paid, then post acquisition cost you have incurred, then depreciation method. What are the depreciation method you are aware of?
Straight line WDV
Hmm.
digit. There was some digit based method
Yeah,
also.
single digit, double digit, usage base,
Yes, yes, yes.
right? Hour base, right? All those depreciation method will be understanding. Capitalization of interest, I know some of you might have heard this term, like when you can capitalize the interest to the property, plant, and equipment, and when you need to consider that interest as expenditure. Then disposal of asset, how to do the accounting of disposal of assets, how to calculate gain or loss at the time of disposal of assets. If you are doing any non-monetary exchange of assets, if you are using natural resources, then depletion of those natural resources. All those things will be starting in the property, plant, and equipment section, right? Next is investment. So investment can be in equity, in debt, or you can say uh, hybrid instrument also nowadays, right? So all those things will be understanding what is debt security, what is equity security, what are the methods for calculation of the investment value, right? And then some miscellaneous topic. Then we will be understanding more in detail about intangible assets, which is goodwill, or you can say trademark, patents, right, and other assets. There we'll be understanding nature of intangible assets, usage of intangible assets, recognition of intangible assets, whether those assets are being recognizable, do we get any future benefit of those intangible assets to recognize, or do we not get any future benefit? If we are not expecting any future benefit, then no point of recognizing the intangible asset, rather it should be expense of, right? And then all the acquisition cost and the determination of the useful life, and then after how to do the depletion, or you can say amortization of the intangible assets. All those things will be understanding in point 3.6. Right? Then we'll be jumping into the payables and accrued liabilities. Payables may include your you can say current liabilities, which is payable for your stocks, payable to the employee, right? And then liability arising from any exit or disposal activity. Generally, like if you see like in oil and gas agencies, or sorry, oil and gas industry, they put they do the drilling of the wells to extract the oil from the seabed. Then it's a mandatory requirement from the government. They need to do the rigging of that bed after extraction of the oil. It's being mandatory obligation on the company that they need to make the seabed same as it was before digging into it, right? So that is their exit liability, that is disposal liability. So those liabilities they need to recognize upfront, and how they need to recognize, at what value they need to recognize, those will be understanding. And then cost of expenses and non-government not-for-profit organization expenses, those all things will be understanding in 3.7. Then we'll be understanding on long-term debts, long-term debt or financial liability. It can be note payables, how to do the accounting of note payable, bond payable, how to do the accounting of bond payable, whether those bonds are convertible bonds or non-convertible bond, short-term bonds or long-term bond. All those category may have different accounting treatment, right? And then modification and extinguishment of any debt. So for example, if you have taken any loan from the bank for let's say 10 years, and after 3 years your financial situation is not so good, and you are a trouble debt for the bank, and you went into the negotiation, and then bank is ready to forgive certain amount of debt, or might have been forgive certain amount of interest, right? How to treat those modification of the debt into your accounting or into the bank's accounting or financial institution accounting, that will be understanding here. Trouble debt restructuring or debt covenant compliance. So all those things will be studying over here. The next topic will be equity. So classification of equity, there are different category of equities also, like equity may include equity with shareholding rights, equity with non-rights, right? Equity of common stock, equity of like consider in the preferred stock, or the convertible debenture, convertible debt in the future equity. All those classification will be understanding what category of equity need to be classified in which category, basically, right? Then issuance of stock, treasury stock. Have you heard about this term before, treasury stock? Have you
No,
heard about this term called treasury stock?
no, sir.
No, sir.
Have you heard about the term called buyback of stock?
Yes, sir.
So this is similar. How in India we call buyback of stock, in US we call it treasury stock. That means company purchasing their own stock back. That is called treasury stock.
Oh, okay.
Dividend and stock split. Stock split, when you have let's say $100 one share and you split it into $50 each, that is called stock split. Dividend stock, that means you have let's say $100 stock and you have given one new stock on the 10 stock. So in US, to the equity they call it stock. That's also a different terminology they used. Here in India we use stock as an inventory, interchangeable, but in US stock means shares, right? Then other equity topic, partnership firm, non-governmental, not-for-profit organization, net assets, which comes under the equity category, right? Then after we'll be jumping into the revenue recognition. So far we've discussed all the item relating to the balance sheet. Now we are jumping into the income and expenditure side. So in the revenue recognition, we'll be understanding all the 5-step model, which is being very much aligned with the IFRS, identification of contract, right? In that contract, identification of performance obligation, then identification of transaction price, allocation of transaction price to the performance allocation, and finally recognition of revenue. So these all 5-step model we'll be discussing in detail with a lot of examples around all those 5-step model, right? Then we'll be discussing in detail about revenue from long-term contract, installment sale, which is different than how you used to treat installment sale in India, or how we treat installment sales under IFRS. So in US GAAP, it's completely different. That also we'll be understanding. Then miscellaneous revenue recognition topic, and then non-governmental not-for-profit revenue and the deferred revenue. These all things we'll be covering in 3.10. Then here comes the stock compensation, like Kashish, which you were saying ESOP. ESOP will be coming under the share-based payment or stock compensation. So that will be covering over here, how to do the accounting of ESOP or share-based compensation to the employees, or sometime company issue stocks to the vendor also. How to do the accounting treatment of those stocks. Then lastly, we'll be understanding income tax, which include deferred tax asset, deferred tax liability, interperiod income tax allocation among the different quarters, then uncertainty of income tax, that is majorly relating to litigations, claims, and assessment, and then some miscellaneous topic of tax. So this all will be covering in the 3rd chapter. So 3rd chapter is more relating to assets, liability, income, expenditure, and taxes, right? Any doubts so far? What all we can expect to cover in chapter 3? So far, so good? Are you guys with me?
Yes, sir. Yes.
Yes, sir.
You are getting the feel what all you can expect in next 12 weeks on your way?
Yes, sir.
Or you are feeling drowsy? Shall we take a break over here and then we can come back after the break? You guys are feeling drowsy.
Yeah, little bit, sir.
Okay, let's take a quick tea break, or you can say a brunch break. I'm not sure whether you guys had a breakfast or not. So it's around 12. We can come back at 12:30 and then finish off rest of the things today. Right? Shall we come back at 12:30?
Sure, sir.
Yes, sir.
Okay, let's enjoy your brunch, tea or coffee break and come back at 12:30.
Okay, sir.
Sure.